I am Troy McGuire, co-founder of FinTech TV, and Taking Stock starts now.
And we got 2 minutes to go to rock and roll here into the closing bell. And look who just magically walks into frame the moment I say his name, the great Peter Tuchman, the Einstein of Wall Street. Welcome back, man. Been a minute since we saw you.
Yes, sir.
So what did you see into the tape as we head into the close? We got the Dow at all-time highs. We got Peter Tuchman back at the big board.
So we've got 2 days left. Tomorrow's the last day of trading. Obviously, we're seeing a lot of rotation because look, there are huge moves in all the indexes right now. We saw them close out the S&P. Russell was a big rebalance, the reconstitution on Friday. Today, the numbers have been massive on both sides, so they don't really need to do any window dressing to close this. You know, this is the end of the quarter, end of the half. Right, we've got massive rotation, and whether it's a swap out with chips and with tech, it's, you know, what we're seeing is when the sell side comes in, it's really them sort of cutting back on their positions. They're way over their skis from the valuation of these big sectors that have been so inflated. And then on the other side, it's just they're looking for value. So they're, you know, that's why they're buying the Russell, right? The Russell's performed really well. Yeah. So they're taking some of their overperformers, getting out of those because they're overweighted, and then they're buying value. So you're seeing rotation. You're not seeing, you know, at a level where the market is just, it's enthusiastic on every front.
And speaking of the Russell, huge Russell rebalance on Friday. 4.2 billion on the close. We got to leave it there. We got Deutsche Bank here to ring the bell for quality. Peter Tuchman, much more Taking Stock coming up after this. And there you have it, your final tale on the tape on this Monday, June 29th. The S&P up more than 1.1%. The Dow 30 in record-setting territory, in positive territory. That is 0.6%. New York Stock Exchange Composite Index up, let's call it 0.5%. And the small caps up 1/100th%. They were down all day until the final moments of the closing day. Let's bring in Eric Criscolo, market strategist here at the big board, for his take on today's tape and much more. My man, welcome in.
Happy to be here always.
So actually, look at the Russell. I mean, we were red all day. We just maybe, depending on the final tape here, eked out fractional gains. But really, what a big story that has been, the outperformance of small caps relative to the S&P 500. What have you seen so far, knowing tomorrow is the final trading day, I believe, of the first half of the year?
Yeah, I mean, it is amazing to know that, you know, we always talk about the mega caps, the huge tech stocks that are driving the S&P 500 higher. But then you look, like you said, the Russell 2000, the smallest caps, the smallest companies in the United States, and they're doing great, right? And so it just kind of shows you how, you know, this kind of rally that we're seeing to strengthen the equity markets, it's relatively broad-based. And so it's not just the mega caps that are holding water. It's basically everything underneath them also that are just seeing incredible gains right now.
What do you see with regards to the overall resiliency in the market shaking off? No shortage of maybe negative headlines that might otherwise bring about a knee-jerk reaction. Investors saying, all right, on to the next one.
We had a war with Iran. We had oil go to, you know, well over $100, $120. Before that, we had we did a reordering of global trade with tariffs, and all the S&P 500 did was go higher and higher and higher. The market is incredibly resilient. Number of reasons why, but that also kind of starts to bring in more and more of the when do we hit a top? When do we see a correction? We're not seeing it yet. Every time we dip, there's buyers that come in, buy the dip, and drive us higher. So the market has wobbled, flows have rotated, sectors have come in and out of favor, but everything kind of keeps going higher. So that's kind of what we're seeing still. But it does bear the question of how far, how long does it last?
Well, we know how long this week will last. Only 4 trading days, given the 3-day holiday weekend. What do we see? Yeah, no, none of us are. What do you see with regards to volume? Maybe usually a lighter than average, knowing we're also coming off that huge rebalance, that reconstitution day on Friday, but not a whole lot going on this week.
Yeah, it's interesting to come off, like you said, a huge Russell rebalance, huge volumes on Friday, last Friday. We come into the July 4th week, shortened week, so, you know, traders start heading to the Hamptons, desks get light, activity generally slows down a lot, but that also can induce a lot of volatility news flow on the tape. There's not a lot of traders that are taking either side, so you could see a lot of heightened volatility, even if volumes themselves are relatively low. So that is definitely one thing to keep an eye on, especially with the quarter end.
I want to get your take on rotation. Halfway through the year, tech, energy, industrials, the best performers year to date, but the last 4 weeks, healthcare and financials are higher up, 2 of the top 3. What do you make about not necessarily seeing the people that are usually leading the pack doing all the heavy lifting?
Yeah, it kind of goes to what we just said a couple of minutes ago, where everyone says tech leading higher, mega caps, blah blah blah, but then you see the XLV, the healthcare sector, the financial sector, these sectors that have lagged for a while now, not just this year, but over the several years, especially healthcare, they're starting to get a bid. Eli Lilly is now a $1 trillion company, right? So all these areas these sectors are big enough to absorb flows coming out of tech, and they could easily go into healthcare, they could easily go into financials to keep the rally going from kind of underneath tech if things wobbled up there. So it's a healthy kind of rotation to see these sorts of things.
Very strange we've got a jobs report on a Thursday, but given the 4th of July holiday, we will get it. Is your sense it could be big enough to move the needle, or knowing it is ahead of that 3-day weekend, maybe the type of thing investors kind of say, meh, shake off and put their attention towards places like the Hamptons?
I think that's more likely to happen. The labor market has showed a lot of fantastic data coming into it. We've seen all the weekly jobs reports, the initial claims. They've all been solidly, low level. Continuing claims, low level. Even some of the ancillary reports could just point to a very strong labor market. And so I don't think a lot is expected to kind of move the needle on the jobs report on Thursday. That being said, the biggest moves happen when people don't expect a big move. So we'll see what happens.
All right, the great Eric Criscolo, market strategist here at the Big Board. My man, thank you for being here to kick off the week. Nice to see you.
Happy 4th of July if I don't talk to you.
There you go, my man. We will talk to you soon. Here's a few of the top analyst calls that moved the tape this morning here on Wall Street. First up, Seaport upgrading Warner Brothers Discovery to a buy from neutral. They say any deal risks with Paramount now appear lower. Shares of WBD down 7% on the year. Next up, BMO upgrading Casey's General Store to outperform. 950 price target, stock up 40% on the year, but down 15% the last 2 weeks. Finally, Melius initiating coverage on Seagate and Western Digital at buys. Price targets of 1,600. Thank you, Peter, and 1050 respectively. Jeff, let's take a look at one stock that calls the New York Stock Exchange its home. It is shares of ORCL, down about 0.5%. The cloud computing giant holding steady after its worst week since 2001. Shares fell 40% overall for the month of June. Maybe a bit of an increasing concern to investors. Oracle's debt, its overall bet on AI concerning investors. Shares down about 25% since the start of 2026. The New York Stock Exchange's very own Kristen Scholler sat down with Pennsylvania Senator Dave McCorrick at the All-In Liquidity Summit to discuss all the ways the Commonwealth is embracing the AI revolution. Take a look.
We just saw you speaking on stage alongside Democratic Senator John Fetterman, also of Pennsylvania. What is your message here at the summit?
Well, I think the reason we probably were invited is we're sort of unique in the Senate. There's only 3 states that have a Republican and a Democrat, so we're one of the 3, but we probably have one of the best relationships in the Senate of the 2 senators from the state. We work together on a lot of things. I'm a strong conservative, he's a Democrat, he votes consistent with his party, I do the same, but we look for ways to work together. And so whether it's stopping the flow of fentanyl, whether it's working on energy policy, whether it's fighting against anti-Semitism, we've been great partners and we're good friends. And I think, unfortunately, that's rare these days in politics.
In your role as Senator of Pennsylvania, how are you trying to bring economic impact and transformation to that state?
Yeah, well, it's honestly one of the most exciting moments, one of the most dramatic moments of change in our lifetimes, probably in human history. Just think about the pace of change. The AI revolution is moving at a breakneck pace. It's one of the few, probably the only technology in history that innovates on top of itself and is highly dependent on energy and an energy revolution, and Pennsylvania is uniquely positioned with energy. We're the 4th largest natural gas reserves in the world. We're the 2nd largest energy producer in America. So that AI energy revolution is coming to Pennsylvania. And it's a driver of economic growth, a driver of jobs. So Senator Fetterman and I are very focused on working on that together.
Yeah, I'm also curious how defense and life sciences fits into your own goals as a senator?
Well, those are the big three, as I can talk about them. So those three all offer enormous opportunity for economic growth. You know, when I ran on a platform of bringing economic opportunity to Pennsylvania. And so Pennsylvania has, in some ways, been in decline in terms of its economic vitalism and its job growth. These three areas are bringing enormous opportunity. And you're seeing the energy AI revolution. You're also seeing a revolution in defense. Defense spending is going up, and the nature of defense is changing with autonomy and robots and AI. And then the same is true for life sciences. We have some of the biggest research centers in the world in Pennsylvania, Pittsburgh, and Philadelphia. And the AI revolution and life sciences revolution are going hand in hand. So all of these are areas for growth, economic opportunity, and innovation that's not just going to be good for Pennsylvania, but really for mankind.
What were your takeaways from the Energy and Innovation Summit in Pittsburgh last July?
Well, you know, what was special about that, my wife and I hosted it. We had the president there, his cabinet. We had the Democratic governor. We had Senator Fetterman. We had CEOs from energy, AI, investing, global investors. We had union labor leaders. And what I am proud of about that, we got the $92 billion of investment from many of the companies there. But it was so expansive in terms of who was there. And that's what it takes to win. Winning is a team sport. You need bipartisan collaboration, you need business at the table, you need the union leaders, labor leaders at the table. That's what was special about that. And those investments are taking place across Pennsylvania as we speak and creating tens of thousands, eventually hundreds of thousands of jobs.
Talk to me more about that $92 billion.
Yeah.
How are you seeing that being invested?
Yeah, it was about $40 billion in data centers and about $50 billion in energy. And that energy is energy infrastructure. For example, in Homer City, which is in western Pennsylvania, they're converting a coal-fired plant to a gas-fired plant, 4.4 gigawatts. Then right next to it is a huge data center campus that will use about 3.4 of those gigawatts. A gigawatt will go onto the grid, and then there's all sorts of work happening on transmission to be able to take that energy onto the grid. So that's creating tens of thousands of jobs right there in Homer City, and these are great paying jobs. It's going to be great for the community. It's already great for the community, and so that's what's happening across Pennsylvania.
Certainly, it sounds like you see opportunity when it comes to AI. What are some of the challenges that exist?
Yeah, I'd say AI is a moment of profound change. It offers limitless opportunity. It also has huge risk, and it depends on what we do. And you know, the areas of risk are certainly from a national security perspective. These technologies are so incredible. If in the wrong hands, they could be used to do damage to communities, to our country. That's one obvious concern. Children, ensuring our children don't have access to artificial intelligence tools in a way that could jeopardize them in some form or another. It certainly will have some degree of job disruption. It's a little bit unclear what that will look like. Actually, in Pennsylvania, it's been a huge source of job growth because of all the infrastructure, but I think we certainly have to retool the next generation to be comfortable with AI, because some jobs will go away and some new opportunities will be created. That's just what happened when the internet came about. I ran an internet company 25 years ago, and that created enormous new jobs, and it also eliminated some jobs. So we have to make sure that the next generation is prepared for this moment of really profound change.
Today too. The weather's perfect for our outside part. Nice.
Welcome back to the broadcast. You are watching this Monday afternoon edition of Taking Stock live from the trading floor of the New York Stock Exchange. John Tilley joins me now, Global Chair at DB Pride, right off the Bell podium himself. Not even the first time he's rung the bell here at the big board. Welcome back to the New York Stock Exchange.
Thank you.
What was the experience like for you and your team? And for people a bit unfamiliar, what are you really here for? What are you here to celebrate on a day like today, John?
Well, thank you for having us. We're here to celebrate Pride, but more importantly, we're here to ring the bell for LGBTIQ equality. In partnership with the UN agencies, COPA and Open for Business, we're really sending a message to the world that inclusion is important for markets, inclusion is important for companies. We're also celebrating Pride. Yesterday was the New York City Pride March. Deutsche Bank was one of the first corporate sponsors. We were there with over 300 of our colleagues. And it's really inspiring to see a company like Deutsche Bank out there year after year with over 300 of our employees walking down Fifth Avenue to cheering crowds everywhere.
You talk about the ways that inclusion is important for business. How about a lot of the ways that it is good for business? Because the data really backs up this argument as well.
Yeah, I mean, the data is definitely there. We've recently sponsored an Open for Business report that looked at 290 publicly traded companies, some of the ones traded here. And those companies that are more inclusive are 2.4 times more profitable than those that weren't. And so you can actually check out that Open for Business report. We have another issue coming out looking at the global markets in the Southern Hemisphere as well. So the data really is there, and that's why Deutsche Bank is here, ringing the bell for LGBTIQ equality. Because good business, it's good for business, it's good for markets.
Tell us about your year-long Pride campaign, and correct me if I have this wrong. When I think of home,
Yes.
What is that all about? And especially that keyword home. I feel like that's really the one that stands out there.
Yes, home is a very important word. When I think of home is actually from the 1978 film The Wiz. Our whole theme is looking at the queer history of the Wizard of Oz. So our whole purpose is Deutsche Bank is dedicated to our clients' lasting success and financial security at home and abroad. Our strategy is the Global House Bank, which is really German for home. So when we thought about what we could do for Pride this year, we wanted to buy the rights to a song, so my colleague Mark Kellum literally is going to sing Home, Diana Ross's version from 1978, in the boardroom in a few moments. It forms the basis for our commercial you would have seen on ABC TV on Sunday. You can see on LinkedIn today and on our website. And really that's helping us tell a story. Not only we're talking about inclusion is important for markets and for Deutsche Bank, but it's really how do we actually tell that story of what home means, because home means something very different for the queer community. For a lot of people, home is where you came from. For us, it's actually home as a chosen family. For me, home is Deutsche Bank. It's where I came out and it's where I feel the most supported.
Wow. Can you talk to me a little bit more about your own personal journey to the degree that you're comfortable and really your relationship with Deutsche Bank? And I always love asking people in interviews like this, what are those core values, those differentiators for a place like Deutsche Bank that you see really exemplified by what it means for you personally to be here today, John?
Yeah, I mean, for me personally, Deutsche Bank was home, like I said. It's where I came out, right? Everyone's coming out journey takes many phases, right? You come out personally, you have a journey on self-acceptance. For me, the last phase of that was coming out at work. It was actually a brave moment. One of my colleagues and now good friends actually was just discussing his ex-boyfriend, the global head of real estate lending, my business, and just overhearing that kind of conversation empowered me to come out. And then that empowered me to get involved in DB Pride and essentially changed my life. Right, and then you think about it, all those times you're at the water cooler talking about your weekend. If I was dating a guy named Tony and said Tanya, that takes up more of a brain capacity than you could think. Or if you're trying to build lasting client relationships that are based on trust, people can tell you're lying. So that's for me is why Deutsche Bank is home, because when you can bring your whole self, you can be more productive for the bank, build better client relationships, and pretty much not only make more money for the bank, but also do more better for the world.
That's incredible. Before we let you go, and you've been very generous with your time, what do you most want people to take away, not just from the month of June, but especially a day like today?
I mean, today is about more than that, right? Just a kicking off point, right? Pride is all year long. So when you think about what we're doing here for the Bell, it's not just about Pride Month, it continues throughout Europe, and our campaign will go all year long, all the way through Sydney in March.
John Tilley is the global chair at DB Pride. Congratulations. I'm really grateful for you being on the show and ringing the closing bell. Come back anytime.
Thank you for having me.
All right, don't go away. We've got a lot more Taking Stock coming up live from the trading floor of the big board right after this. Welcome back to the show. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence you need for your Monday afternoon. At this hour, the crypto majors are in positive territory. Bitcoin, Solana, and ETH all up 1%, 3%, and 3% respectively. Next up, U.S. spot BTC ETF seeing more than $1.3 billion in outflows last week alone, extending a record streak of withdrawals as investors pull back from crypto amid broader risk-off sentiment. And finally, Chinese AI startup Zipboost says its latest model now matches Anthropic's cybersecurity capabilities, raising fresh questions about whether U.S. export restrictions on advanced AI models could end up narrowing the U.S.'s technological lead. Last week on the J.D. Durkin Show here at the New York Stock Exchange, I caught up one-on-one with the great Ryan Dietrich of the Carson Group. He's also a CNBC contributor. We talked about a lot of things facing investors in this bull market, including rotation and much more. Take a look. Not necessarily, as Sonu and I were talking about, it doesn't just have to be the generals leading the pack all the time.
I don't think so. No, I think it's nice to see the soldiers participating. And you know, one of the ways we invest a lot of money, right? At Carson Group, we manage a lot of money for our advisors and our clients, and we've been taking like some barbelled approaches to a lot of it. You know, momentum on one side, low vol on one side, large cap on one side, small cap on the other. I mean, I assume right now, the time we're doing this, small caps are up 20% for the year. I don't think, and they literally hit an all-time high just yesterday. Small cap advanced decline lines just hit a new all-time high. What's that mean? Again, participation, breadth. These trends are real, but don't go all in one area, because I mean, tech has done amazing. I mean, 6 months ago, everybody loved Mag 7. We get it. They're master of the universe all over the magazines. I remember seeing some of the magazines coming out and said, ooh, that's a very high bar. And if you would have talked to someone and said, I don't know what Microsoft's down for the year, 20, 30%, close enough for government work, down a lot, I would have said, ooh, I bet we're having a rough year. But we're sure not. I mean, we're not, right? We're doing just fine. I mean, at the time we're doing this, S&P's up ballpark 8 to 9%. JD, fascinating thing about that, only 4 times in history has the stock market gained between 8 and 10%, about an average year. So what's it tell us? Bigger moves are much more likely. So are we really going to finish right here, right about an average year? I mean, I know Sony laid it out before it came on, and we're saying no. We're still saying there's upside. We've got about a 15% target in the S&P 500. Our mid-year outlook comes out in a couple weeks. We're probably going to up that a little bit. So we're still pretty optimistic here.
Remind me the price target? What was it?
15% on the S&P 500.
15% off these relative levels.
Yeah, well, that'd be for the year. So it's about between 78 and 7,900.
Okay.
But we're probably going to up that here in a couple weeks. But I hate to give targets as a strategist, even though it's kind of my job. When we manage real money, we're overweight equities. We're always kind of tinkering and then sell a little this, a little that, but we're still over a 60-40 portfolio, right? That's kind of the benchmark for a diversified portfolio. We're about 68, 69% equities, about 31% other stuff. Yes, there's some bonds in there, some managed futures, some gold, but really in that big bucket, we still like the U.S. A lot. We like Europe a lot too. Emerging markets, not as much, but emerging markets, we think you get plenty of tech exposure if you own the U.S. So believe me, the time we're doing this, there's a lot of new highs hitting around the globe. So that's something to be thankful for as investors.
So you mentioned the Mag 7 year to date. Not a whole lot going on. Microsoft down 26%. We got Alphabet in the lead.
Hey, I said between 20 and 30, didn't I?
You did. You nailed it. You nailed that one. I asked this question to Dan Ives several years ago.
Oh, boy.
I'm going to throw this at you.
Okay.
If you had to add one stock to the Magnificent Seven to make it the Elite Eight, what would you add? Oh, you almost went
Broadcom?
AVGO.
Yeah, Broadcom.
Nice. Okay,
Yeah.
good. I like that answer.
So I don't follow individual equities very closely.
I was thinking that.
I can talk about anything. You kind of scared me with that. But I think that one, I mean, that one's, you know, or Wendy's. It's a joke. I mean, Wendy's the last couple days. I mean, that thing's up.
Producers, Wendy's chart, please, from Wall Street Bets.
We can talk about that if you want. I mean, Wendy's is that's that meme trade. That's
yeah, let's do it.
Someone from Ohio. Wendy's is based in Columbus. You know, so there is, when I see stuff like that, there's pockets of optimism, right? There's pockets of, oh, look at this excitement. We saw the big IPO, obviously, recently, and more IPOs are coming. But I tell you, JD, when this market's still doing what it's doing, I just don't see a lot of optimism. I don't see a lot of excitement. I really don't, you know, and there's some pockets of it. Bull markets are supposed to be fun. Right? I mean, you mentioned Dan Ives. Dan's the man. I mean, Dan got his name running through the mud last year a lot, and I didn't like it, but it is what it is. Sure. And Tom Lee's been bullish. People just kill these bulls when the market has a normal correction, and nobody's ever going to always be right.
Time for the latest headlines in the world of startups, raises, and rounds. First up, Rocket Labs acquiring satellite communications company Iridium in an $8 billion deal as it looks to better compete with SpaceX. Next up, Google Ventures leading a $30 million seed round for Nebix. It's a startup founded by former Axiom Space CEO Tejpal Bhatia to build a global deal-making platform for space development. And finally, China's robotics arm is accelerating with AI Squared Robotics and Alibaba-backed X Square Robot, both topping $2.9 billion valuations. And now Money 2020's very own Scarlett Sieber is back with Hindsight 2020. That's, of course, where she breaks down important dates in financial history. Take a look.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is Hindsight 2020. Let's rewind to June 29th, 2007. Apple releases the iPhone. At first, it's a device story. Touchscreens, apps, design. But very quickly, it becomes a finance story. The iPhone turns money into something you carry by default. So let's break that down for a second. Banking becomes mobile first, payments become app-based, financial decisions move from desks to your pocket. This changes expectations permanently across the board. Consumers stop tolerating delay. Instant becomes the baseline. UX becomes competitive advantage. Let's fast forward to today's fintech ecosystem. Wallets, neobanks, embedded finance, all of it assumes the smartphone. June 2007 didn't just change how we communicate, it changed how we interact with money. And that is your Hindsight 2020, because once finance fits in your hand, convenience, that just becomes the standard. Have any other dates that you want us to highlight, moments in history from fintech? Drop them in the comments below, and maybe they'll make the cut. In the meantime, back over to you.
Tomorrow here on Wall Street, we will get the JOLTS data, that's job opening and labor turnover, crossing the wire at 10 a.m. for investors to digest. After the bell tomorrow, we also got a handful of quarterly results from names like Constellation Brands as well as Nike. Your final tail of the tape on this Monday, June 29th, one for the history books, of course, if you are an investor in the Dow Jones. But the S&P 500 up 1.1%. The Dow 30 components in positive territory, 0.6%. The New York Stock Exchange Composite Index here at the big board up about 0.5%, while the small caps up 0.01%. The Dow, led by strength in names like Goldman Sachs and Caterpillar, closing at an all-time high. Its first ever close above 52,180. That is going to do it for this Monday edition of Taking Stock during this shortened holiday trading week. Thanks for watching today's edition of the show. Have a great Monday night. We will see you again tomorrow morning from the big board.